In your market news now, stocks in Asia ended the day somewhat mixed. This followed an overnight surge in oil prices driven by assurances by US President Donald Trump that his brokering between Saudi Arabia and Russia could see the OPEC plus countries cut oil output immediately. However, some market players are not sure that's going to happen. Market players remain worried about the global economic impacts of the coronavirus. The Nikkei share average was barely changed, ending the day up 0.01%. The Hang Seng Index ended the day down 0.2%, while on mainland China, the Shanghai Composite Index declined by 0.4%. Over in the United States, stocks there yesterday were partly on the back of they rose. Stocks rose partly on the back of a rally in oil prices, easing concerns about possible job losses in the energy sector. Volatility, of course, remained the order of the day, however, as investors also had to digest data showing that 6.6 million American people claimed unemployment benefit in the week ended March the 28th. The Dow Jones Industrial Average ended the day up 2.2%. The S&P 500 firmed by 2.3%, while the tech-heavy Nasdaq climbed 1.7% at the close. So the local equities market is on the back foot, with the financial counters leading the drag. This is little wonder as the local currency continues to lose ground. Today it traded as low as 18.79 against the US dollar. The combination of fears for the global economy, how the South African economy will cope post the lockdown period, and the Moody's downgrade have not augured well for the fortunes of the rand. Meanwhile, Brent crude continues to accelerate, and that was trading above $31 earlier on, and that bucks the trend of other commodities which are down. Let's take a look at the indicators. Well, to discuss the markets further, I'm joined on the line by Warwick Lucas. He's the Chief Investment Officer at Galileo Capital. Thanks very much for joining us, Warwick. So there must be a lot of trepidation in the markets for those US March non-farm payrolls, which are coming out later today. And that's on the back of the fact that we got data recently showing that 6.6 million people claimed unemployment benefit.
Yes, good afternoon, Nompu. Clearly, those unemployment claims were quite horrifying numbers. The report that we will actually see on non-farm payrolls will be much more muted because it's based on a survey that really concludes around about the middle of the month. But quite clearly, that first of all, 3 million and then 6.5 million climb is a huge number. It would theoretically take US unemployment from 3.5% to 9.5% in just 2 weeks. But I think it is important to point out that in the face of the coronavirus outbreak, the US government waived a lot of restrictions on registering for unemployment. So, for example, a lot of independent contractors and self-employed people who usually wouldn't qualify have now got the capacity to temporarily receive benefits. And the fact that they make registration a heck of a lot easier for this process also meant that allowed for a huge surge there. So the real true unemployment number is going to lie somewhere in the middle there.
So yesterday, the oil price surged on comments made by President Donald Trump that Saudi Arabia and Russia may cut oil production. Do you think that's possible? And what difference would it make if they did do that, given the fact that, very few economies are moving at the moment, what with so many lockdowns?
Yeah, absolutely. I mean, the mutually assured destruction to the economies is starting to look like too steep a price. But unfortunately, they've let the genie out of the bottle. Some countries really do live hand to mouth on their oil exports, and when prices fall, they pump more. So add to that, to the immobilization of economies, and absolutely, that excess production is out there in storage and will take a long time to clear.
So what's Galileo Capital's approach to this market volatility? And what are you saying to your clients when the phone is ringing off the hook right now?
Okay, so I think we may have views on assets and asset classes, and often very specific and at times quite punchy views, but we nevertheless prefer a multi-asset approach, and that's quite simply because the future is unforecastable. In the latest situation, you don't even... What's going to be the end game? Is it going to be inflation or is it going to be deflation? With all the stimulus and at the same time all of the pressure on economies, it's really hard to forecast that kind of thing and dangerous to try. Will it last 3 months or will lockdowns prevail? There's so many unknowns. But what I can say is that while the recession is for now, saving is for the rest of your life. And for those that can continue, have the capacity to save, should continue to do so. And hopefully get at least something in the form of cheaper assets while the economy and markets are in such a bad shape.
Yeah. Warwick, we see that the rand is really losing quite a lot of ground. It breached 1880 a little bit earlier in the day, and people are talking about it possibly reaching 20 against the US dollar. Your thoughts?
Well, I mean, 20 is a nice round number. Look, in real terms, it was certainly lower during the South African banking crisis of 2001. I mean, that really fell very, very hard indeed then. So 20 wouldn't be as bad. But it is possible in the short term if traders aggressively push it. But once the economy gets back online, it's probably not a level that would be so sustainable. In other words, the crash in the demand for South African exports and the general fragility of our economy made it inevitable that the rand would fall. But the rand is South Africa's shock absorber. And once the economy comes back online, I guess I would see the rand starting to recover from that kind of level. And by the way, that's downgrade or no downgrade.
Yeah, but you say once the economy is up, back up and running, but then how much of the economy will be left? And I don't mean to sound alarmist after the lockdown.
Well, that's always a question. I mean, clearly the services side of the economy is going to be most hurt, and there's going to have to be a lot of socialization of losses and so on. But I mean, in terms of the likes of commodities and so on, well, I mean, those will still be in place. The question is, can they start resuming offtake to export markets in a reasonable clip? And that, of course, is an unknown.
Yeah. Look, South Africa has been lauded for the way that it's handled the coronavirus situation and closing down the country when it did and all of that. We've heard about a number of African countries going to the IMF and tapping on their coronavirus fund, but South Africa hasn't done that yet. And of course, we know that fiscally, we're in no position to actually do much. Do you think it would be prudent for the government to tap on those funds?
I suppose only they would know the answer to that, knowing their position best. But I mean, clearly you don't want to be the last in the queue. I think in terms of the prudence of the lockdown, yeah, I guess I mean they've preempted early. Certainly, the experience with the Spanish flu a century ago was those that locked down early tended to have the best of it in terms of death rates and so on, and in terms of economic recovery thereafter. So cross fingers. It seems as if our president may have done the right thing here. We've been early, and hopefully numbers continue to stay flat. Although it is possible that a little second run could happen, and if that does, we just have to be patient and grit our teeth and see our way through it.
Yeah. Warwick, thank you very much for your insights. That was Warwick Lucas. He's Chief Investment Officer at Galileo Capital. We'll have more news for you after a short break. Do stay tuned.